Challenges Go Crypto Investing, and in this nightly update, we're going to get into some more breaking news that took place today out of the United States government levying some fines against the crypto exchange. And we've been talking about this, and I've been emphasizing and reporting that in this bear market and the deeper this financial crisis gets, the United States government, as we head into 2024 and the start of the implementation of the digital revolution and the CBDC, the central bank digital currency, or as old Vincenzo calls it, the Fed dollar coin, gets implemented, more and more of these things are going to happen. And we're going to get into that in a minute. And that's why it's very important right now for you to take 1 second and hit that like button. Help push us through the YouTube algorithm. And then it's also equally as important to pound on that bell notification, hit that bell notification and click all. That way you stay up to date on all my latest videos as the inflationary depression that I've been warning about starts to take hold. And then hit that like button and comment down below to push us through that YouTube algorithm, so that way Vincenzo's Gold Crypto Investing can help prepare as many people as possible. And the only way that's possible is by you, yes, you. Look at yourself in the mirror. I'm talking to you on the other end of this conversation. To get us to spread the message, it's going to have to happen through you by hitting that like button, subscribing, and the bell notification, so that way we can educate and, most importantly, inform the retail investor and the retail trader on this inflationary depression, the monetary and fiscal policy that's driving this crypto market, to help you make informed decisions on your investment adventures, as these are only my own personal opinions, because I am not a financial advisor. This is just my overall thesis of the market, right? And as we get into it now, you can see the XRP price is now sitting in this consolidation zone. You can see the volume. If we look at the volume, get that out of there, with our industry exclusive drawing tool, the mean and the volume is right there in orange. It's trending down. We had a nice double bottom here, or a W reversal pattern in the weekly time frame. But then in the weekly time frame, before we zoom in, you can see these big wicks right there. Anytime you get those big wicks running up against the moving averages, that's telling you there's a lot of sellers there. And you say, Vincenzo, why would there be sellers there? Well, there would be sellers there if we look left in the chart. And when we look left in the chart, that's an old Vincenzo trading rule. You look left in the chart. Look at all of these buyers that are stuck up there, getting fleece heisted and shisted to the most extreme degree imaginable. So you got to think what's going to happen up here. Sellers are going to be quick. Sellers are going to be quick. Sellers are going to be quick. Sellers are going to be quick, just as on the way down, you can see these big wicks. Buyers were quick. Buyers were quick. Buyers were quick. Buyers tailed off, steadied off, and started to decline. And now you had the breakout to the downside. Now on the way up, the buyers are going to be quick to sell there, right? Because they're all stuck in there. They were the ones buying here, and buying on that wick. So now when the price gets up here, they have sellers and they get out. And if they're at a loss, it's a minimum loss, right? So that's why the sellers would be quick to be on the trigger. They're like quick draw McGraw, right? Old Western. Fucking shoot 'em, McGavin. That's how they are up there. And that's how they're going to continue to be until you chip away at the wall of sellers up there. And that's why we're getting big sell-offs every time we get up there. You can see when we isolate it into the 4-hour time frame, we pumped up into here, hit that major blue resistance box that we've had. Sellers came in, price steadied off, and then it came down, right? Then it came back up here again a few days later on September 1st, quickly got sold off on a nice wick there. The sellers were there. Then it came up, steadied, built a little bit of base, pumped up into the region again, but topped out again, and then the sellers drove it back down to the 100-day moving average, just below that critical 50.5 cents, the support resistance level. And right now it's acting as major resistance, like old Vincenzo predicted on its way up. When the XRP price was headed up into this, we were advertising that this was a major upper resistance zone, and it continues to be so. And if it gets rejected here, it's going to come on down to that 37 cents. If the buyers can come in and it can hold, 68 cents is your major upper resistance at the top part of this blue resistance support box. And I'm forecasting it on the next big move to come down to the 200-day moving average, just as we talked about the last time we talked earlier this morning. And that is going to continue to be the case here as we look at the XRP price, and that is your macro time frame. On a wrap up, 37 cents major underneath support, 68 cents major overhead resistance, 50 cents critical area that it's got to either break to the upside or it's going to get harshly rejected to the downside, decision time. And then the volume indicator major support resistance zone, 32 cents to 29 cents. When it's on top of it coming from above, it likes to act as short-term bullishness. So if we had a big catastrophic fall, you would expect to have some buyers down there to at least push the price, if it came all the way down here, to push the price back up into something like that. But that's what we're watching out for. And now in the breaking news department, as I'm your home for blockchain technology and cryptocurrency breaking news, as well as all the legal legislation and news that comes out as we push into the 2024 cashless society. That's old Vincenzo, and you can see Bitrex fined $30 million for sanction violation, $30 million for sanction violation. The United States Treasury cited the transactions and Bitrex Corporation as a mitigating factor. Bitrex will pay $30 million in fines and penalties for violating U.S. Treasury sanctions as of 2014. As a result, it states Bitrex failed to prevent persons appropriately located in regions of Ukraine, Cuba, Iran, Sudan, and Syria from using the platform. $263,451,600.13 worth of virtual currencies related transactions. That's a lot of money. The Treasury further claimed Bitrex policies and procedures demonstrated at least a partial awareness of OFAC sanctions as early as August 2015. So that's a long time. And then you can see CNBC is also carrying this article as kind of a way to fact check what's going on. Treasury fines crypto, as old Vincenzo just disclosed in breaking news, $29.3 million for violating multiple U.S. sanctions Bank Security Act. Bitrex agrees to pay $24.3 million to settle civil charges that it conducted 116,421 transactions valued at more than $260 million that violated U.S. sanctions. FinCEN imposed a total civil penalty of $29.3 million, which covers additional violations under the Bank Security Act. This woman right here, the former head of the former Fed chairman, or when she was there, the chairwoman, Janet Yellen, she knows very little about monetary and fiscal policy and how to actually drive a prosperous nation. She is brainwashed into modern monetary theory and was once quoted as saying interest rates don't matter with the national debt in regards to the national debt because interest rates are low. Well, interest rates are no longer low, and her statement is asinine, and she is part of the criminal gangsters and a head henchwoman for the cartel that manipulate the markets. The Treasury Department fined a Washington-based cryptocurrency trading platform nearly $30 million for violating multiple sanctions. And this is just going over what we just looked at, the $260 million that violated sanctions, $29.3 million for the Bank Security Act, and that's just the latest victim of the United States government and a never-ending, ever-expanding regulatory and government pressure on cryptocurrency trading sites, cryptocurrency companies, cryptocurrency coins themselves, and anything that has to do with mining or cryptocurrency in general. You better have your P's and Q's and dot all your T's, dot all your I's and cross all your T's and double check your X's, because the federal government is on the prowl, and the federal government has new legislation that must be imposed, and the federal government has an